Hello everyone, welcome to today's video and this is your friend Bharat Shankar. Imagine you have invested in India's fourth largest IT company which serves Fortune 500 companies and you are already sitting on 300% gains on that stock, but still you don't want to sell that stock and continue to hold that stock for long term because you find that everything is going perfect for this company and the long term future of this company is very secure. But then suddenly everything changes overnight because the founder of the company makes a press release where he publicly admits that he has been manipulating the profits of the company for the last 22 years. And once this news hits the mainstream media, the stock price nosedive from 170 rupees to 6.5 rupees within just 3 days of time period. And just like that, the stock you thought was a blue chip company became a penny company in just 3 days of time period. And this scam which destroyed the retail investors was India's largest corporate governance scam, which was a scam of about 7,000 crore rupees. And because of this scam, investors lost about 14,000 crore rupees of their investment. And this scam was popularly termed as the Satyam scam on the newspaper titles. So in today's video, we'll try to understand how did India's fourth largest IT company managed to carry out this scam for the last 22 years and how this scam finally got busted. And along with that, in this video, you are also going to learn two very important lessons. Lesson number 1, how to avoid such scam companies in your investing journey. And lesson number 2, how to identify these companies in the first place. So before we continue with the video, I would like to tell you that me and my team, we really work very hard to make such quality videos for you guys. And if you want to appreciate our hard work and efforts, then you can press the like button and like the video. And you can also press the red button to subscribe to the channel. So let's continue and start from the very beginning. So the main character of this story is Ramalinga Raju, who is a son of an ordinary farmer. But Ramalinga Raju was very ambitious, and to fulfill his ambitions, Ramalinga Raju studied very hard and he also went to abroad for his higher studies and got his MBA degree from Ohio University. But very soon, to fulfill his bigger ambitions, Ramalinga Raju returned to India in the year 1977, where initially he started his first venture in hotel business, which failed miserably. And after that, Ramalinga Raju was inspired by Dhirubhai Ambani, just like any other person in the 90s, where he saw that Dhirubhai Ambani is making a fortune out of textile business. So Ramalinga Raju also started a textile mill by the name of Sri Satyam Spinners. And in this business, he invested around 9 crore rupees, but this business also failed very miserably. But Raju didn't give up. He started another business in the real estate market where he named the company as MAYTAS, which is nothing but Satyam spelt backwards. But unfortunately, MAYTAS also failed very miserably. But remember this name MAYTAS because it is going to be an important part of the scam story. So after failing miserably in the business of roti, kapda and makan, Ramalinga Raju finally got his break because during that time, Ramalinga Raju saw a massive opportunity in the IT sector and he knew that it is going to be the future in India. And so Ramalinga Raju founded Satyam Computers Limited in the year 1987 with 20 other employees. And very soon the company became a massive hit and the Fortune 500 company John Deere became Satyam's first Fortune 500 client. And very soon in the year 1991, Satyam also launched its IPO and became a publicly listed company. And this further allowed the business to grow rapidly, becoming one of the top players in the market. And soon Satyam became the fourth largest IT company only after TCS, Wipro and Infosys. At the peak of its success, Satyam employed more than 50,000 employees and operated in more than 60 countries. And at that point of a time, Satyam was seen as a prime example of an Indian success story and the financials of the companies were perfect and this company was worth around $1 billion in the year 2003. And in the year 2008, the company even crossed the valuation of $2 billion. And along with this massive growth, Satyam Computers also became a leader in Indian corporate governance and accountability, where the company won the Golden Peacock Award for corporate accountability in the year 2008. So at this point of a time, everything was going smooth and perfect for Satyam Computers. But then tensions and problems began when Ramalinga Raju decided to merge MAYTAS, which was his infra company, into Satyam Computers. The merger of the two companies gave rise to various legal issues and investors also started questioning because Satyam was an IT company and MAYTAS was an infrastructure company that dealt with real estate. And merging these two companies didn't make any sense for the investors. And during this point of a time, Ramalinga Raju's brothers were also involved in the business. So this situation left Ramalinga Raju and his brothers into trouble. And then suddenly Raju resigned from his position as chairman and released a confession letter of 5 pages. And in this confession letter, he admitted to committing a fraud of 7,000 crore rupees and said he was manipulating the financials of the company like revenues and profits for the last 22 years. And in an immediate reaction to this confession, investors lost as much as 14,000 crore rupees as Satyam shares went for a nosedive. So now comes the real question. How did Raju brothers manipulated Satyam financials and why? So if you see, in the early 2000s, the real estate business was booming and Ramalinga Raju's dream of establishing a real estate company was resurrected. So Ramalinga Raju started buying lands all over India under the name of his old real estate company MAYTAS. And Ramalinga Raju also had the inside information of the metro routes in Hyderabad, and using this information he started buying properties near to the metro route before the news became public. Because once the news will get public, the prices of those properties will skyrocket, and that way his company MAYTAS will make a huge amount of profit. But this master plan of Raju had a small problem, and that problem was, in Andhra Pradesh there was a rule that any company can't buy more than 58,000 acres of land. And to solve this problem, Raju opened 365 fake companies and started buying land through those fake companies. And Ramalinga Raju wanted to buy more land, but very soon he ran out of funds. And now to get more funds, he executed his master plan that led to the Satyam scam. So Raju used his personal computer to create a number of fake bank statements in order to inflate the balance sheet of his company Satyam Computers with the cash that simply did not exist. So the company's global head for internal audit created fake customer identities and fake invoices in order to inflate the revenues of the company. So to put it in simple words, for example, let's say that the actual profits of Satyam Computers was 60 crore rupees, then in the financial statements, Raju would show the profits as 600 crore rupees to show everyone that Satyam Computers is growing rapidly and Satyam is a fast growing IT company. And he also displayed 13,000 bogus employees, and the salaries of those bogus employees directly went to Raju's pocket. So in short, we can break down this scam process of Raju into 3 simple steps. Step number 1, show unbelievable growth in the company by creating fake bills and fake invoices. Step number 2, wait for the investors to believe in this fake growth and take the share price to new highs. And then comes step number 3, where Raju sold his shares in Satyam Computers at a very higher valuation and invest those profits in the real estate business. And this master plan of Ramalinga Raju was going very smoothly, but in the year 2008, because of the housing market crisis, the property prices all over the world started declining. But Ramalinga Raju was not prepared for this situation, and because of which he had over leveraged himself and invested into real estate market. But now the property prices have dropped by more than 50%, and so his real estate company MAYTAS was bleeding heavy losses. At this point of a time, Ramalinga Raju had no other option, and to save himself from this drowning situation, Raju came up with a plan to merge Satyam Computers and MAYTAS. But the merger plan failed because investors raised a lot of questions asking that how it makes sense to merge a IT company with an infra company. And now Ramalinga Raju was cornered and had no other option but to tell the truth. And so he made a press release where he accepted publicly that he was manipulating the profits and the revenues of the company for the last 22 years. And Raju at a later point of a time also mentioned that his situation at that point of a time was like riding a tiger and not knowing how to get off the tiger without being eaten. And 2 days later, after his public confession, Raju was arrested and charged with criminal conspiracy, breach of trust and forgery. And then CBI raided Raju and his brother's house, and based on the evidence they found at their house, Raju was sent to jail for 7 years. And also the company PwC, which audited Satyam Computers, was also found guilty, and the license of PwC was revoked for 2 years. And this whole scam had a huge impact on the share market, because in just 2 days after Raju's confession, the share price of Satyam Computers fell to 11.5 rupees compared to its height of 544 rupees in the year 2008. And the investors also lost trust in the companies audited by PwC, and the stock price of those companies fell by 5 to 15%, and also Sensex fell by 7.3%. And now, after knowing all this information, some of you might say that Bharat, the Satyam scam was an unlucky incident because nobody saw it coming. And in stock market, these kind of scams keep happening, and there is no way we can identify such scams before they are exposed. And if you say so, then let me tell you, there were few investors in the stock market who saw this scam coming, and they exited from Satyam stocks before this scam was exposed. And now you might ask us that how these investors were able to identify something was going wrong with this company and how we can learn from it so that in future we can identify and avoid investing in companies like Satyam. So some of the investors noticed that the shareholding of promoters in Satyam Computers was about 24% in the year 1999. And in business terms, who is a promoter of a company? A promoter is nothing but the founder of a company or a organizer of that company. So in case of Satyam Computers, the promoters were Ramalinga Raju and the brothers of Ramalinga Raju, who held about 24% of the company in the year 1999. But then in the year 2008, they sold about 22% of their stake in Satyam Computers and their remaining holding was only about 2% in the entire company. And look at the coincidence. The scam was exposed just 1 year after that in the year 2009. So the lesson we can learn here is that if you see any company in which the promoters are constantly selling their stake or selling their shares in that company, then it's better you consider that as a red flag. Because if you think about it logically, if there is something wrong going on with the company, then the first person to know about it will be the founder of the company. And if the promoter is not confident about the company and they themselves are selling shares of that company, then there is no reason why a retail investor should own the stock of this company or be confident about that company. So in simple words, if you were an investor in Satyam Computers and if you had noticed the promoter holding of Satyam Computers in the year 2008, then you could have easily avoided and exited that stock. And that is why it is very important for a stock investor to keep checking the quarterly results and the annual results of the company, where he can understand the financial performance of the company and also how the shareholding pattern of the company has changed compared to the last quarter or last year. So this is the first lesson we can learn as investors from Satyam scam, and then comes lesson number 2. So when the stock price of Satyam Computers was skyrocketing, many people bought this stock only because of Ramalinga Raju, because at that point of time he was being called as the Bill Gates of India, and that was their biggest mistake. And so lesson number 2 is, as a retail investor, never invest in a company simply because the CEO of a company or the founder or the promoter of the company is frequently in the news for making some big comments about his company, or because he's a likable personality in the media where media is constantly praising that person all the time. So as a retail investor, always remember to invest in a good company and also keep tracking the financial performance and the shareholding of that company on a regular quarterly basis. So that's it for today guys, and I hope today's video was informative, and if you think so, then make sure to press the like button and like the video so that YouTube algorithm will help this video to reach as many people as possible. And you can also subscribe to the channel by pressing the red button, and you can press this bell notification so that you get an immediate update as soon as we upload a new video. So that's it for today guys, I will see you in the next video. Until then, this is your friend Bharat Shankar signing off.